Okay, thanks a lot and good afternoon. It's such a pleasure to have you here. My name is Conrad Afande, like policeman, AFANDE, and I work at Capital Markets Authority. I'm the manager for education and awareness. We've got quite a bit of information to share. And with me is my very able colleague. I'll let her introduce herself. But actually, you can introduce Lucy. You can turn the camera.
Good afternoon, everyone. It's nice to have you on board, and we welcome you to this forum, which we look forward to sharing insightful information with you. Karibuni sana.
Okay, thanks a lot. It's quite interesting. We have a lot of online forums that we do as an authority, and we like to keep it a bit intimate where we target specific groups. Now, the actual event today is specifically for the youth, and so the message that we have is for you to understand the investment opportunities, the risks and opportunities. So that's what we're talking about. And I know that in the session, we will there are two presentations, one on investments and one on investor protection. And we plan to end at about 3:30, 3:45, and we want to leave like maybe about half an hour for us to have a discussion where you can ask your questions. You can actually ask your questions through the chat at the bottom of your screen, or at the end of my presentation, I'll give you a chance to raise your hand, and you can actually turn your microphone on or your camera. If you want to be a movie star, you can turn your camera and you can ask your question. So I think it's a pleasure. So either way, you can do the chat, you can jot down your questions, or you'll get a chance to have the camera. So again, the whole message is for the youth. Now, don't be, if you're not the youth, it's okay. Okay, there's still information that applies to everyone. Okay, that's really important. Okay, and part of the reason that we're having this conversation is if you look at globally, if you look at the economy, if you look at macroeconomic factors, look at the exchange rate of the dollar versus the Kenyan shilling, look at the global, the ESG, meaning environmental, social, and governance issues that are happening. These are real issues, and you guys are the future. So, I mean, for me, my responsibility is to make sure that you understand investments, because one of you in this room will be the next CEO of Capital Markets Authority. Somebody in this room here might be the next governor of the central bank. And when I'm retired, you will be managing my money. So the little money that I've got. So you, it's my interest to actually understand. Okay. So with that, now out of curiosity, I want to get a feel of the age group that we have here. So if you don't mind just typing in the chat at the bottom, you can actually type your age. Just put a number. You can even lie, that's okay. Just lie, we won't hold it against you. I see we got 32, I just want to get 32, 30. I just want to get an average of how the age group that are here. So I think, let's see, now 32, 28, 31, 24. Oh, okay, we got a 24, that's fantastic. 21, oh, I love this. So I think, thank you so much. I got 38, fantastic, 38. Very good, very good. I think you have an appreciation of and this is the exact target audience that we're looking for. Okay, the age group that's running the Kenya's economy in the next few years. Okay, so thank you so much. I think it's safe to say that the average age is about, Lucy, would you say about 30, 31? Oh, 30. Of course, okay, this is a bad joke, but me and Lucy being here, we're pushing the average age now to 40 something. She's looking at me badly right now, but it's not my fault. My beard, I'm like Father Black Christmas. Okay, so now I've got a presentation. Allow me to share my screen. In just a moment. Let's see here. And maybe Lucy can confirm if you can see my screen.
Yes, Conrad, I can clearly see the screen.
Okay. Thanks a lot. Thanks a lot. And as I mentioned earlier, I'd like you to jot down your questions, okay? And there's no question that's a silly question. You're here to learn and to understand the basics, and we might get a bit technical, but we try to speak in a layman's term that you understand, okay? And if you notice, this is being recorded, and I'm hoping The transcript. Lucy, I think, do we normally see the transcript when I speak? Because I don't see that happening, but it's recording anyway, right? Okay, but it's recording. Okay, that's fine. Okay, so I think my presentation is a fairly short presentation. It'll take about 20 to 25 minutes, and then we'll get a chance to ask questions, and then Lucy will come on and talk about protection, and you'll get a chance to ask questions, and then we'll have a plenary at the end, where, as I mentioned, you can send your chat at the bottom, or you can actually send your question. And I'll ask my colleague Lucy to as I speak. You can type if you type a chat, Lucy will make notes of them and she'll give them to me later. When I'm done, and I'll read the question and answer the question and answer your the question that you have. So getting started. As you're aware, we're Capital Markets Authority, and we are the regulator for the capital markets in Kenya. Think of us as the policeman for long-term capital. And in my next slide, we'll sort of look at the ecosystem of where we fit in. But we've been around since about 1989. And when you think of stockbrokers, investment banks, that's who we regulate. So our mandate is to make sure that your hard-earned money is protected and that nothing goes wrong. And we have regulations and systems in place to make sure that all the companies that we license are complying with the requirements. Now, how does CMA fit into the whole financial sector in Kenya? Because a lot of times people get confused between central bank, retirement, the insurance, and basically the Central Bank of Kenya is basically for money markets. When you talk about the the interest rates, the forex, talk about commercial banks, basically that's who regulates them. Then you've got the Retirement Benefits Authority. Okay, now people, I'll tell you this. If you ask me, okay, I won't give away my age, but if you ask me the one thing I regret, if I could do just one thing, if I could go back in time, the one thing I'd do is I'd start investing more for my retirement at a very early age. Trust me, if you're 24, 25, and you think about 60, 55, it seems like a long time ago, but I mean, it was a long time coming, but trust me, look at now, it's already March, in a few months, it'll be Christmas. I mean, time's like moving. So please start investing now. And the Retirement Benefits Authority ensures that your pensions are protected, and they've got regulations on the limits. And that's a whole other arena. Then you've got capital markets, as I mentioned, which is like the exchange, the Nairobi Securities Exchange. The exchange, for those of you that are not too well versed, when we talk about the Nairobi Securities Exchange, think about the exchange as a market where you buy your vegetables, okay? Now, the vegetables are the stocks of different companies, okay? So you cannot go directly you can't go directly you can't just go anywhere and buy the vegetables. You have to go to that particular market. So that particular market is the Nairobi Securities Exchange, okay? And right now, the beauty is with technology, and I'll be talking about that in a little bit. With technology, you don't have to physically be there. You can actually transact right from your mobile phone. And a lot of our licensees, the companies that we regulate, have mobile applications. So that's where we fit in. Okay. Oh, sorry. Let me put this in presentation mode. Okay. Thank you. Thank you very much. Yeah. So basically, that's where we come in, and we've got a lot of products. Keep in mind, we'll be having a series of presentations. For me to sit here and talk about all the products, it's just there's not enough time for that. So the purpose now is just to give you a snapshot and to get you sort of an intro, if I may. And then in the next few sessions, and we've got your contacts, we'll be inviting you for more sessions. Then you've got the Insurance Regulatory Authority, or better known as IRA. And basically, just like you guessed it, there's medical insurance, there's home insurance, there's insurance brokers. That's the regulations, and I'm sure you read about that. And just a few weeks ago, they actually put a big ad in the newspaper with all the insurance companies that they renewed, so that you're dealing with legitimate companies. Then you've got the SACCO, Society Regulatory Authority, which is, of course, for any SACCOs that are deposit taking. Okay, now not the non-deposit taking. The smaller non-deposit taking are sort of supervised by the Ministry I think of cooperatives, but this is anything that's deposit taking is regulated by SASRA, which is SACO, Society Regulatory Authority. Okay, so that's a snapshot of who we are. Now, I want you to have an appreciation, and just for the record, when we talk about the youth, we mean anyone from 18 years, from 18 to about, it's actually 18 to about 34. Okay, and I think you saw the average age here was about, I think 31, 32. Okay, now if you look at in Kenya, okay, the median age is about 19 years old. Okay, about 80% of Kenya's population is below 35. Okay, let me repeat that. 80% of Kenya's population is below 35. What does that mean? When you think about the future, if the average age is 35, that means if you're 35 right now, in the next 10 years, you'll be 45. And when you're 45, you're a CEO, you're the governor of the central bank. So it's important that you understand investments because you will shape the future, okay? And I'll tell you something else, and not just in Kenya, but globally, the jobs are shrinking. You know, I think there's more of a population growth in relation to the number of jobs that are created, especially in Africa. So we've got to find avenues of wealth creation and not just depend on jobs. We'd like you to actually invest enough to have your money to start a company and then employ people. So that's the importance of who you are today. Okay. Now, I took, right before the presentation started, I made a call to one of my colleagues, and I wanted to find out exactly what is the age group of people that are investing in the capital markets right now, okay? And these numbers that you're seeing are true numbers, and they are accurate as of about a month ago, okay? Now, if you look at this, these are the number of people that have registered with what we call the CDSC, the Central Depository Settlement System. That's a system that when you buy shares, it's like the bank of shares. It settles for you, okay? And you can see that obviously, from 1 to 18 is the least, okay? Because, I mean, I'd love for the 3-year-old to buy shares, but I mean, they're still young, and perhaps the parents can have a trust for them. But understandably, that's low. Now, if you look at the second lowest is our youth age 19 to 25, and we have almost 10,000, about 9,600 that are open CDS accounts right now. Okay, so that's a fairly low number. And then the number gets a bit bigger. Look at the age group, and I think that's the age group that we have in this presentation. That's 26 to 35, and you guys have about 30,000, about 31,000 accounts, okay? And then 36 to 45 are 40,000. So you can see the 36 to 45 are the most active people in the capital markets in Kenya, okay? Okay, then of course, as you get older, you can see then the 46 to 55-year-olds, and then 56 to 65, they're very active as well. And then close to retirement, it sort of dwindles, and you get back to 27, and then 18,000. Okay, so this gives you a snapshot of the investment profile. Okay, now, of course, I'd love to see the 19 to 25 get a bit higher. Or the 26 to 35, but look, the 36 to 45 is really the group of youth that can shape Kenya, and that's a number that can actually increase substantially. Okay, so it's very important for you to understand just the investment habits. Okay, now at the same time, the numbers you saw is between 2013 and 2022. Okay. So the majority are between 36 and 45, okay? The average age of active and trading is about 48, okay? So let me explain what that means. The slide that you saw before this are individuals who've opened a CDS account, okay? Now, the fact that you open an account doesn't mean that you're trading. It doesn't mean that you're buying shares, okay? We want you to buy shares. Don't just open an account and then keep quiet, okay? So as much as the 36 to 45 are the most registered, it's the 48 years that have investments, okay, that are trading, okay, the ones that are buying and selling shares, okay. And then you can see that investors between 36 and 55 traded the most between 2020 and 2022, okay. Over 2 billion shares were traded, Okay, and if you recall, this was during the COVID pandemic, and a lot of people were switching more to equities, and companies such as Safaricom, and mostly telecoms are doing. Actually, telecoms and pharmaceuticals are doing quite well because everyone is getting internet, everyone is buying phones, everyone is buying bundles. So the share price like skyrocket to almost like 47. Okay, so and then the number of accounts that were opened between 2013 and 2022 was about 21,000. So we want to make that number a bit higher. Okay, now before I move on, and please, ladies and gentlemen, we have a mobile app. Okay, so I'm going to pause, and please, everyone in this, I was going to say this show, everyone in this online platform, please just take 1 minute and download the CMA app. Okay, just go to Google Play and download the app. Okay, we have a lot of features on the app. You can link to intermediaries and buy shares. You can get information about capital markets. If a broker approaches you, you can actually go on the app and get their actual ID number, registration number with CMA. You can get real-time information about items that we're doing, upcoming events. You can request for events. You can write comments. There's a lot of information. And the beauty about it is we keep improving it. So if you've now that you downloaded it, when you download, if you see something that needs improvement, please give us your feedback. And we have a feedback mechanism in the app. Okay, so I don't know, Lucy, do we have a prize for anyone who downloads? I think you mentioned something about do you have some cash for anyone who downloads?
Yes, let everyone download, then we'll see what we can give them as a gift.
Okay, yeah. So I hope you're not cheating people. You've got to give them something. So let me ask you, so Lucy, how can we prove that they've downloaded the app?
They will have to answer some questions.
Okay, yeah. So listen, my fellow youth Kenyans. In fact, Lucy just gave me an idea. At some point in this presentation, okay, I'll ask everyone to open up their screens. How about that? And then show us your phone with the app there. No, that's a bit risky because I don't know if one thing about online events, you could be anywhere. I don't know if you're in a bar, I don't know, or in some place you're not supposed to be, and somebody will see you. But anyway, download the app. We have a lot of information, and you can give us your feedback. Okay. Now, just a quick discussion. Okay, and let me actually minimize my screen so I can actually see what you see. Now, the screen you see in front of you, I'd like to ask you a question, and you can just type your answer in the chat. Okay, if I gave you 1 million, okay, let's make it 10 million. If I gave you 10 million right now, 10 million shillings right now, okay, if I gave you 10 million, what would you do with the money? Okay, you've got the mobile phone right there. You've got I think it's a Ferrari, Lamborghini right there. You've got a house, you've got land, and you've got shares. Okay, so just in the bottom of again in the chat, can you just type what you'll buy? Okay, there's no right or wrong answer. Just type your answer at the bottom of the screen. So what would you participate in? So interested. What would you buy? Let me get into the chat here. See what. Oh, you've done. Oh, good. People are downloading. I like that. I see Rogers will buy land. Vincent will buy land. Japheth would buy a house and some shares. Okay. Let's see here. Sylvesters will buy land. Okay. Let's see, land and shares. Okay. Thank you. You've downloaded. Thank you so much. I think this is such a fantastic audience. This is Wilson Investing Housing for renting. Okay. Okay. I just want to see like 1 or 2 more. Okay, so I think now, if you notice, let's have a quick chat about this here. Now, you see that I asked you a question. I asked you, what would you purchase if I gave you? Oh, let's see what Loreen. Let's see what did Loreen? Can you see? I think I saw Loreen's name here. What did she? What would Loreen? Loreen. Oh, Loreen. Land and shares. Okay. Very good. So Now you notice, I think most people are saying land and shares. There's nothing wrong with that, okay? But I want to paint something in perspective, okay? In this economy that we're in right now, it's very important to diversify your portfolio. So unlike anyone who gave more than one answer is a true good answer, okay? Number two, anyone who included shares is a bonus, okay? And I'll tell you why. And I'm not just saying that because I work for CMA, okay? And my boss is like watching me and I have to say that. I'm saying that because look at the facts, okay? There's no other investment, okay, that can surpass equities. When I say equities, I mean shares, okay? That's legal. What am I talking about? Here's an example. If you bought Safaricom shares, and I'm not saying Safaricom because I'm promoting it, it's just a real, example. If you bought shares of Safaricom like 10 years ago, okay, the lowest the shares were was I think like 2 shillings a share, okay. Now, the highest that it went up to was about maybe a year or two ago, it went up to 47 shillings a share. So that percentage is almost more than 6,000% increase, okay? If you bought a house 10 years ago, it would not appreciate by that amount. If you got a land, it would not appreciate by that amount, okay? Now, what am I saying? I'm saying that you have to diversify your portfolio. Equities, when you buy shares in a company, unfortunately, a lot of Kenyans think that you buy shares today and sell tomorrow, okay? Instant gratification is not about shares, okay? Buying shares is not gambling, okay? It's not a port where you just sort of gamble. You do some research, find out what the companies, and the beauty, we have regulations and continuous reporting obligations that make companies have to report their their profit and loss statements. Any change to personnel, like the CEO or directors, then you have to report that. So you have informed information, okay? So what have we learned? We've learned that housing does not appreciate as much as shares, okay? Number two, in case of emergencies, okay? And people, it's a reality. Who would ever think that we'd have a global pandemic where we can't go to the office or to school and work from home? These are things you watch in a movie, okay? Who would ever think, for some of you that were, of age, in the 2008, 2007, we had the global financial crisis, okay? In 28, we had the post-election violence, okay? Now, during post-election violence, the investors that lost the most are people that owned land, okay? Because why? If there's a crisis, you cannot pick your land and run away with your land. You can't pick your land and put it in the pocket and run away with it, okay? Same with the building, okay? And at the same time, if you've got an issue, you cannot, it takes like 3 to 6 months for you to sell the land or property, okay? Yeah. It takes 6 to 8 months for you to sell your property, okay? Now, in shares, when you buy shares, if you've got an issue, it takes 3 days for you to sell shares and get your money. T+3, that's what we call it, okay? And because you all know life happens, in life, you actually have to be aware that as long as you have investments, sometimes you need to tap into that. What if you have a medical emergency? I think one of the biggest things we see in Kenya is medical, which is huge. Medical can take up your whole retirement. So keep that in mind, that you have to be conscious of the fact that, that when you look at properties, you have to have shares as part of your package, okay? Okay, now that we talked about shares, it's very simple. A share is a piece of a company, okay? It's a piece of the company. And when you buy shares, you're buying a piece of that company where you have voting rights, the different classes of shares, which I'll go into in another session. But basically, it gives you the right to vote in what they call an annual general meeting or an extraordinary general meeting. It gives you a right to play a part in the decision-making process, okay? And it makes you, a shareholder, the shares obviously go up and down. And the trick is you buy when the shares are down, okay? In fact, if you ask me, now is the best time to buy shares because The shares are kind of depressed right now because of macroeconomic factors, because of the US dollar, okay, and the Kenya shilling. And the reason why it affects listed companies is because these companies that import products, it's now more expensive to buy them with the Kenya shilling. So of course, it makes the cost of living a bit higher, and you're seeing everything skyrocketing. And then the shares, there's less demand, so it goes down. But if you buy now, I'm somebody who's a bit optimistic about the future, okay? I've always been like that since I was small. I think the economy will get better. I think, I don't know what part of Kenya you are, but today in Nairobi, we had rain, which is, I mean, yeah, you know, I've never felt so excited to see rain. I mean, I felt like running out and getting a plate and eating rain. I mean, that's how excited you are to see rain. But I think things will get better. So make sure that you buy shares. And the beauty about shares is, all information about the company is in the newspaper. And the newspaper, 6 days a week, from Monday through Saturday, there's a page that talks about the shares and how they're performing, how they performed previously. Anytime there's something major about a company, a listed company, it's in the newspaper, it's in the social media. So you get informed about issues that are happening with listed companies. So you know, so that's what we mean by shares. Very important. Now, if you are somebody who is, you know, the last thing I'll say about shares, the money that you decide to invest in shares should not be your life savings. It should not be your university fees, or not be a substantial amount based on your portfolio, okay? Don't run. If everyone's running north, don't run north, okay? Everyone's got a different story, okay? Everyone has a different budget. You don't know where people get the money from, especially in Kenya. So always invest with the amount that you're comfortable with. Now, the rule of thumb is the amount of money that you buy shares should be the amount of money where if something went wrong and you lost that money, you'd still be okay. Okay, that's just as a safety note, okay? So don't put all your money into that basket, yeah? Now, we have a second type of investments. I just want to talk about this general investments for the youth that I think you'd be interested. The next one is called bonds, okay? You have a government bond or a corporate bond. And basically, a bond is basically when a government borrows money from the public, okay? Or a corporation borrows money from the public, okay? And the beauty about it is you lend the government money, and then every six months, okay, they give you a return, okay? And the average interest rate in Kenya is about, for the bond, is about 14%, which is one of the highest in the world. You can do the math, okay? So if you give 1 million, I mean, 14% of 1 million, you know, given that, you know, every 6 months is good money, okay? And then at the end of the life of the bond, which we call the tenure, you get your principal back. So if you give 1 million, you get interest of 14% annually. If it's say a 10-year bond, after 10 years, then you get back to the 1 million. So you've made money, okay? And the government has a good rating. We've never defaulted on a corporate bond, or sorry, not a corporate bond. We've never defaulted on a government bond. We've had some issues with a corporate bond, which we've actually rectified, and you know, you can ask me questions about that. It's in the public domain. And one question that we get often, people ask me, now, Conrad, when you talk to the youth, I may not have a lot of money, but are you saying that I should actually, because the minimum for a bond, a government bond, is about 50,000, okay? But let me tell you this, you know, the youth are very good in hanging out together. I see all the youth in different groups, in investment groups. You can actually form an investment group, call it a name, go to the Central Bank of Kenya, open what they call a CDS account, and then invest as a group, okay? The only thing is you have to have like 2 signatories, okay? And make sure that not everyone is signatory, because somebody can just go and liquidate the bonds without you knowing. But it's a good way of investing. Form an investment club, buy bonds. It's safe, it's secure, and not, you know, you get your money back at the end, okay? Now, last but not least, I'd like to mention, we have what we call unit trusts, or what we call collective investment schemes, okay? And a scheme, for lack of a better word, is basically a chama, okay? It's where a fund manager who we license will take pooled funds, will basically take money from people and invest them in different investments. It could be money markets, could be equities, could be a mix of both, called a balanced fund. And the good thing about the structure, if you look at my screen on the left, you can see you have a trustee, and a trustee is basically the assets are separated from the company, okay? And then you even have a custodian. A custodian actually holds the actual the deed to the unit trust. So you're protected even if the intermediary goes under. Okay, so the fund manager. So a collective investment scheme is a safe way. If you are risk averse, you don't want to buy shares in one particular company, you can open an investment, you can participate in this and buy shares in groups of companies, which minimizes the risk. So they say, don't put all your eggs in one basket, and this is a better way of doing it. You can invest more, okay? And I'm happy to answer questions about this. In the next session that we do in a few weeks, we'll get more into detail and get more intense about the structure and how it happens, okay? Now, in terms of risk, of course, cash is very low risk, okay? Money market is very low risk. Equity is medium. Stock exchange is high. And then Dukkha on the side road is very high risk, okay? But if you notice one thing about this slide, the higher the risk, the higher the return, okay? So there's no way you can make a lot of money if you don't, make risks. Look at all the big companies. They've all listed in exchanges globally. So that's very important, okay? Now, when I talked about the three types of investments, cash, bonds, or stocks, if it's a cash, you've got the products there. The returns in cash are quite low. I think a fixed deposit right now is offering, actually, right now, the banks are offering the most in fixed deposits, which is about 6 to 7%, which is the best I've seen in a long time, because they're competing with treasury bills and other products. But it's still kind of below inflation. I still believe inflation is above 8% in Kenya, okay? Bonds, you have different bonds that we're offering, and it's a predictable. There's no risk. It's just, the only risk of the bond is if somehow there's a systemic shock and the inflation sort of skyrockets. So if you're holding a bond for 10 years and it's at 14%, and then inflation goes to 38%, like what happened in Ghana, or higher than that, then that becomes, but that hasn't happened in Kenya. I mean, inflation has been stable. The CBK has done a fantastic job in terms of, ensuring that the inflation rate doesn't skyrocket, okay? Yeah, so then we got the stocks, okay? Now, the thing I mentioned about stocks, historically, it's the greatest growth, but it's very volatile, very risky. So you just have to do your research. Don't just buy stocks because your colleague said buy stocks, okay? You have to do your research as an investor, okay? This slide just shows you the miracle of compounding. A is a person who started investing at 40, and B is a person who started investing at 20. And you can see the value profile at the bottom of your screen. So it's never too late. Important. Okay, now these are basically useful links. If you want more information, you go to our website. We have a resource center portal. We have a toolkit. If you've got a complaint, you've got, we have a whistleblower portal. Okay, and I know when you see whistleblower portal, it's like, woo, I know you've watched movies about, somebody taken to a witness protection, little town with a minivan and a white sweater and a polo neck. That's a movie. Okay, this is the real deal. This is where you actually go in. You can report information that's that's fraudulent, and the beauty about it is you get a percentage. You get up to, I think, 5% of the proceeds, and nobody will know it's you. Nobody will know that you've done it. Yeah. So in a nutshell, that's pretty much what I have for you. Right. Let me actually stop sharing. Give me just one moment. Stop sharing my screen. So that's pretty much what I have in a nutshell. And the whole idea is to sort of get you interested in the conversation of investments, especially the three types of investments. And then we can keep having discussions on how you can participate more. Okay. And I'm happy to see that you've downloaded Lucy, did we say we'll open up the screen to let people see the phones? What's your take on that? Or should we pick a person at random? What do you think? What do you say?
I think we'll figure out what we can do to those who have downloaded. But in the meantime, perhaps we first let's see how many more we'll download.
Okay, yeah. Very good. And I think and Lucy can get ruthless if, as a regulator, you face jail time for not downloading the app. Up to 3 years in a hot slumber. Okay, so I think, do you allow me to answer some questions, or Lucy, do you want to continue and then we take them all at the end? What's your preference?
I think we can take the questions at the end, but if there's any burning question, they can type them on the chat so that during the Q&A, we can run through the questions.
Okay. Yeah. If you've got any sort of burning question, we can. And again, Lucy has a fairly short presentation, correct? Yeah. So I think you can let her present. Let me do all the questions. So if you have anything burning, what I discussed, feel free to write the chat, or you can raise your hand and we'll open up your microphone and you can chat. I'm looking at the bottom.
So far, I haven't seen any questions.
Okay. Yeah. I couldn't have been that clear.
Well, I assure you, you've done a good job. It was quite detailed and informative. So I guess maybe we can proceed as people put their questions together.
All right. Take it away.
Okay. Just give me a minute so that I can share the screen. Taking a bit of time, but is it legible? Conrad, you can see it from your end?
Yes, I can see it. Thank you.
Okay. Yes, so as Conrad mentioned, I'm going to take you through basically tips on investing and in capital markets as well as investor protection. And he has covered very well most of the products. And the next session will be now taking you through the process on how you can get involved and how you can participate in capital markets. Just a minute, let me put it in presentation mode. Okay, so I'll just take you through the path to investing. And basically, this is where we recommend that you first identify your investment goals. First of all, before you invest in any investment, you have to see what is the end game or what is the goal that you'd like to achieve, whether long-term, short-term, or medium-term. So with a clear goal, you'll be able then to the next thing is to learn about the investment that you want to invest into so that you don't ignorantly just go into an investment that you have no idea how it operates. Then the next step would be to choose the appropriate investment and finally manage your portfolio. Take an interest in whatever investments you have undertaken so that you're able to follow through and be able to get to see how the portfolio is doing. The next thing is the benefits, Conrad has taken us through the common products in capital markets. And the next would be what are the benefits that you gain from investing in these capital markets. For instance, if you invest in shares, there's always a better return because shares have a higher risk. And basically, they also offer a fairly better return. In shares, you have a variety of stocks because we have about 64 companies that are listed. And out of the 64, you wouldn't miss a company or two that you'd be interested in. We also have the other benefit as in getting some income in terms of the dividend, because the companies, when they declare their profits at the end of the year, most of they will give a dividend out of the profits they have declared. You can use your shares as collateral, and there's also affordability because you need, depending on the price of the share for the company, you are able to determine the capital that you'd require to be able to buy the shares. There's operating convenience when you're dealing in shares because basically once you stockbroker, you only need to give confirmation to your stockbroker on the shares that you'd like to buy, and then the rest is done for you. There's liquidity in terms of if you want to exit the market, you can always sell your shares and you get your money back. And then shares are also a good hedge investment against the inflation. With regard to bonds, as Conrad has mentioned, it provides a safety of capital. And true governments rarely default, so you will get back your principal as well as you'll have earned interest in between the tenor of the bond. There's a structured form of payments in term. By the time you're buying the bond, you already know that I'll get interest every 6 months, so you are able to plan for the income or for the interest for the payments that you will be receiving. There's also bonds also provide a high level of income, and they are also a safe form of collateral. If you need to take a loan, you can always present the bond as collateral. The other products are the collective investment schemes, and here the main benefit is you get diversification. And with the diversification, you normally get to maximize your returns because collective investment scheme, as Conrad has explained, the fund manager will manage for you, and because they are professionals, they have access to all the various products that they can invest on your behalf, and then they are able to give you a return on it. There's continuous professional management, whereby you don't have to keep thinking about how to manage your portfolio or what to do, what to buy the next day or what not to buy. The fund managers who are professionals and who are licensed by the capital markets will do that job for you. So for you, you'll just rest easy and just wait for your return at the end of the period that has been agreed upon. There's also access to an array, a broad array of assets, as I had mentioned about diversification, because the fund manager will have access to various products that they can invest in. There's convenient record keeping and administration, given that these are professional managers and they are required to comply with certain requirements before they are licensed. There's also a scope of good return from the collective investment schemes. So now, how do you, when you want to invest, what are some of the questions that you can ask before you invest? Number one, we always tell investors, you need to confirm if the seller is licensed. And where do you confirm this from? All licenses, CMA gives licenses to all market players in the capital markets. So if you need to confirm if a seller is licensed, you can contact the authority, you can contact the website. The mobile app also has the updated list of all their licenses. So the sources of information are many, and you don't need to take a risk to just invest blindly. Number two, you need to confirm if the investment is registered. There are many products that are being traded but are not regulated by the authority. So you need to confirm if the products provided are regulated by the authority. And then how do the risks compare with the potential rewards? You need to assess your risk appetite, so that if your risk is low, then you need to take a moderately less risk product before you invest. Otherwise, you might end up being disappointed or frustrated if you are not able to absorb the risk in case it happens. Do you understand the investment? Yes. As I had mentioned, you need to take keen interest and follow through the areas of your interest when you're doing the investment, so that in case of any alerts, any changes in the trends, you're able to pick up that and be able to take action. And then where can you turn for help? We can, this I'll discuss in detail in the next slide. So what are the investment considerations that you can take before investing? Number one, please also ensure that you diversify your investment, so that you don't put all your eggs in one bag, and then if the bag drops, then you lose all your eggs. So it's good to have a bit of the stocks, a bit of the bonds, a bit of cash, or whatever other investment that you would prefer. Now, some interesting statistics is that as of December 2019, we had 34% of the individual investors who are female, and 66% of male. However, this trend, the female investors are increasing, and as at December 2022, we had 48% of female investors compared to 52% of the male investors. So congratulations to the females, the female investors, because I see that's good improvement, and I think we should continue with that trend. But the boy child also should not be left behind, so let them also continue investing, and they should not be left behind. So when you want to invest, you also need to know your investor profile. And what do I mean by this? You need to assess your risk, whether you are your risk tolerance, are you risk averse or you are risk taking? If you are risk taking, then you're okay taking the high risk products, for instance, the Forex. But if you're risk averse, then you need to take a less risky product, like the collective investment schemes or the bonds. And then you need to choose the right investment product based on the goal that you had already set for yourself. So bonds are, for instance, if you want a product that will give you some return every other 6 months for whatever project you are undertaking, then a bond would be an ideal product, because that is it gives you a structured payment, and you will know beforehand when you are supposed to receive your next interest or your next income. And then if you're hands-on, then you can do stocks directly. Hands-on meaning that you need to get to know, to be following the trends and see when to sell, when to buy, so that you don't sell when the prices are low and you bought at a higher price. So if you are not hands-on, then you need to consider perhaps investing in collective investment schemes. And then you also need to do your homework before you invest, because you don't want also to go blindly. You need to get to understand exactly what you're getting yourself into, so that you're able to follow through and be able to monitor and see how it goes. Then you need to build your buffer. We keep advising that you don't need to borrow or take a loan to invest, because the rate at which you're repaying your loan may not be the same rate that your investment is giving you back. So you need to build your buffer, have some money set aside for investment, and this should not be the money that is kept for your emergencies. For instance, if you're sick, that's not the money that you should be relying on. the next thing is you need to think long term. When it comes to capital markets, we think long term because, for instance, shares take a bit of time given the fluctuations every other time. So you need to think long term so that you buy shares and keep them for a time so that the price can appreciate, and then that way you will be able to benefit. And then you need to stay on course by monitoring your investment, track your performance for your interest, and then do evaluation options. So we had said you need to diversify so that you don't put all your eggs in one basket. You need to be aware of scams. And here we have provided a number of contacts that you can be able to. Oh, sorry, I'm told that the slides are not moving. Sorry, let me see. Just a minute. Oh, sorry. We have really, I think I'm almost getting to the tail end of the, okay. So this is, Conrad, now, are you able to, is it moving?
Yes. I think you've gone. Are you on slide 9? Is that correct?
Yes.
Okay.
Sorry,
yes.
members, but we will share this presentation, so don't worry. We will also upload it on the website. Sorry for the oversight. So we're slide 9. So the next thing is you need to be aware of scams. Actually, from statistics, there's a next slide. I will try and show you some facts and figures on the fraud status in most of the most of the regions, and then we will see so that we can take note and be keen as we try to invest. So how do we get to invest in capital markets? So number one, you need to open an account with a broker, and that is called a CDS account. The CDS account is like your bank account. So whatever transactions, whatever records that need to be kept regarding your investment are kept in that account. And then you will get your statements whenever there's a transaction or as need arises. You also need to and opening the CDS account is free. You don't have to pay anything. You only need to present an ID and your ID and a passport photo so that they are able to open for you an account. You'll fill some forms from your broker. Will give you some forms that you will fill just as a know your client procedure, which is mandatory. So once you open your account, then you're able to instruct your broker on whatever stocks that he needs to buy for you. Then you'll be able to make the payment and continue with your trading. So next is perhaps you're asking, so how do I raise the funds? For instance, if for entry-level investors, maybe the youth, we know you haven't maybe invested a lot, you don't have a lot of money, but a lot of you I know are in the chamas, you do the merry-go-rounds or something close to that. And that's a way, one way you can raise some funds. So when it's your time to get your chama money, then you can put some aside for investment. Others are lucky, they have been left some funds that they can invest bequeathed by their parents or something like that. And you can also have your savings. Whatever allowances you get for your day-to-day expenses if you're given by your parents, you can decide half of it I'll be saving, or even like 20%. You can save that and be able to build your savings. So where do you get the information? The information on capital markets is available all over. You have the newspapers, you have the television where there's always a business section, and that will give you the daily prices of the stock share of the shares and various other information. We have the resource center portal. We have the websites of the various institutions. We have the mobile app. I'm glad you have already downloaded our app. And for those who haven't downloaded, please just download. You will find it quite informative and you will get all the information you need. And additionally, the app will link you will link you to the intermediaries that have online platforms. So if you have any money or investment that you'd like to make, you are taken directly to the online platforms of the market intermediaries. So you'll be able to transact and get your shares or your unit trust and be able to become an investor. We also, if you have identified perhaps some shares of a certain company, then where do you get the information on that company from? All companies that are listed at the authority, we normally have, we normally receive their annual reports, their financials, quarterly, yearly, and the annual reports. And our resource center or our library has all these details, and you can review that information. We have the breaking news from the television or the newspapers, or even press releases that are usually issued by the authority from time to time. So now I would like to take a quick survey and find out. Maybe you can just send us your response on the chat. Would want to find out whether you would respond to unprompted approach from someone offering an investment opportunity or a loan. So just indicate on the chat if you are approached by someone just to offering you an investment product or a loan, would you be able to respond to them? Would you say yes or no? So kindly let us just know. And then number two, let us also know whether you can provide your personal details or financial details to secure that arrangement, the arrangement, whether the loan or what. So if you accept to respond to that offering, and it was unsolicited, and the person selling to you may not even be known to you, would you also be willing to give them your financial details so that you can secure that arrangement? So I don't know, Conrad, whether you're receiving any responses from the participants.
Yes, we are indeed. And you see that, and actually, I personally have been approached, especially on email, on the mobile phone. I can see Vincent. He says he'd say yes if the offer is legit. But I'd like to ask Vincent, how would you do your due diligence to make sure that it's legit? That's the question that she's asking. Silveras Gazabo is saying, no, I will take time to know the product before I can, invest. So I think, and then I can see one more here. Jaffet is saying, I have to confirm the authenticity of the product and the person. Remember, the mobile app that we talked about will give you all that information. Fantastic. Over to you.
So great, thank you for the feedback. Now, the fact is, a survey that was conducted in the UK indicated that 34%, more than 34% of persons who are aged between 18 and 34, they said that they would respond to the unprompted approach for investments and loans. And then it further indicated that 30% might also provide their personal information, personal or financial details to secure that arrangement. So that tells us how, if in the developed world, these are the rates, perhaps I would imagine that locally we might have higher percentages than this. Additionally, the study indicated that about Kenya shillings 94.5 billion was lost due to fraud and scams in the first half of 2022 in the UK. So that's quite a huge amount of money, and that gives us a reason why we should be extra vigilant and more cautious when we are venturing into investment. Now, this brings us to the section then where we say, then what next? How do we ensure that our investments are protected? And what has the authority done to ensure that investors' investments are protected? Now, at the authority, we have various structures that ensure that or enhance that investors' investments are protected. And internally, we have various units that promotes that. Basically, we have a policy and regulatory framework which formulates and reviews the regulations within the industry, such that there are laid rules and regulations that each of the licensed investors require to follow. We also have an education, awareness, and certification unit, which is basically there to create awareness to and educate the public and disseminate information on capital markets, and just like what we are doing right now. We also have a licensing and approvals unit, which ensures that all market intermediaries meet the requirements that are already set by the regulations. We have a market supervision unit, which also continues to inspect the licensed intermediaries to ensure compliance with the said regulations and the guidelines. In addition, we have a surveillance unit which just monitors the daily trading at the NSE for any suspicious trends. If there are any spikes during the trading period, then that raises eyebrows and calls for need to investigate further and see why such spikes have happened. All this is in an effort to safeguard investors' money. Investigations, there's an investigation and the enforcement unit, which if and when any violations in the market happen, then the perpetrators of the violations are not let free, and they are normally sanctioned, and they are normally actions are taken against them. We have an integrity committee that ensures upholding of professionalism, integrity, transparency, and fairness by all the authority staff. And in case anyone has an issue with any of the staff, there are mechanisms of how they can be able to report any cases. We have a capital markets fraud investigations unit, which is basically a police unit that deals with investigates securities related fraud cases. Additionally, we have an investor compensation fund. Currently, it only refunds up to 50,000 shillings. It may appear like it's little, but basically this takes care of the retail investors who basically may not have a very huge investments, but there are reviews to negotiations are underway to review this amount so that a broader, a wider range of investors should be covered in case of any, if in case there is need to compensate the investors. There's we also have an online complaints portal, and here, if you have any complaints against any of the license of the licenses or the market intermediaries, you're able to lodge your complaint through the authority website, whether anonymously or not. You can also do blow the whistle, which is if you have if you don't want to be known, or if you want to report it anonymously. And then we recommend that people subscribe to the CDSC alert services, such that whenever there's a transaction in your account, you get a notification, and this helps you in case someone tries to transact with a share with the assets from your account without your knowledge. So you get an alert, and that way you can follow up and see who transacted in your account without your knowledge. Finally, we have some important contact information, contact from for the authority, the NSE, and the various numbers or emails that you can reach us on. And Conrad, thank you. I think this is the end of my presentation. Thank you.
Okay, so thank you. And actually, Robert, I'd ask if I do if you can reduce your volume, Lucy, I think there's a bit of an echo.
Oh, okay.
Yeah, just a bit. Yeah. Thank you so much. Let's give Lucy a round of applause, everyone. Or you can do the reaction. Let's do the little, what do you call that? That thumbs up. Let's all do a thumbs up right now. Thumbs up, thumbs up, thumbs up. Clap. Oh, there we go. Thank you. And I just remembered, you never gave me a clap. So make it a double for myself and for Lucy. All right. I think you've had a lot of good information. And, the importance of what we're talking about is basically understanding the products and investments, number one. And number two, understanding that you've got, investments within your reach. Yeah. Now, before I go further, and my apologies if I'm ambushing some two very special guests that are with us today. And I haven't talked to them, so this is live, let's do this. We are privileged to have our senior manager for education, awareness, and certification, Mr. Kamunin Njoroge, who is actually on assignment in Mombasa and took time off his busy schedule to join the forum. So I'm not sure if Brother Kamunyu, I don't know if you're at the beach, the ocean in the background, if you can maybe say karibu and say hi to the people. Kamunyu?
So thank you, Conrad. I'm actually following, but I don't have much to say, just to thank everyone who has attended this forum. And thank you guys for putting this together. Santani.
Okay, thank you. And we also have Chebi, Zephaniah Chebi, who's also our officer, who actually, the email invitation that you got from Chebi, actually, he was the one working it. So I don't know if you want to salimir our guest, Chebi. Yes, Chebi? Okay, I think we'll come back to you later. So I think let me also say a big thank you. I can see Vincent, Silvanus, and Japheth have actually downloaded the mobile app, and they've got a picture to prove it. Fantastic. Let's do this. Let's keep doing this. Do the mobile app. There's a lot of good information that you have there. And we've got some questions. And remember, I said that you've got a chance you can either raise your hand, you can ask your question, or you can put the question on the chat at the bottom. And there's one question about from Wilson, which is a very good question. And the question is, how does one create financial savings with 15,000 shillings? Okay, how does one create savings from 15,000 shillings? What I like about the question is, number one, there's a myth that capital market is only for rich people, which is wrong, okay? And when you look at Wilson's question, which is a fantastic question, there's a lot you can do with 15 grand, okay? And I just want to say one thing to everyone who's here. Let me just get a poll. And don't be shy, we're all a big family here today. How many people here gamble? Or how many people do betting? Or how many people here have ever gambled or betted? Just say aye or no. How many people? We will not hold it against you. I have actually, I've done those Betika and all those things. How many people? Just show of hands. Show of hands. You can just put it on the chat. How many people have ever betted? Okay, Lydia, no. I can see, okay, somebody has. I just want to get a feel. No, let's see. No, I don't bet. Oh, this is a cool. Okay, I have. No. Okay. Ah, good. Okay, I think. Okay, you have. So I think from what I'm seeing, I think about most people have not betted, which is fantastic. But we've got a small percentage of people who've betted. Now, there's one thing I'd like to mention. Is number one, when you bet, the house always wins. What most people do not understand is casinos, all these betting tools like Betika, SportPesa, they actually hire serious scientists to make sure that the house wins. Okay. Now, here's the thing. The reason it's glorified is because, and I'm not anti-betting, I'm just giving you facts, is because the one person that wins something, they'll glorify it in the media. Okay, but what they don't tell you is the 99.9% of people that lost. So you're only seeing that 0.1% who won, and it gives you that hope that you can actually win something, which is not true. Okay, in fact, statistics have shown there's a greater chance of an aeroplane crashing in your living room than you winning 200 million Kenya shillings. It's a fact. I mean, the odds are just so high. Okay. Now, then I say, oh, good. We have some questions. Let me admit something. Let me finish the ones that are written, and I'll come to you, Sylvanus. There's another question. What's the rate? I think in the new Public Finance Act, what's the rate of the proposal for shares? Okay, right now it's 15% on dividends for shares, and when you sell, for right now we don't have capital gains. There's sort of a transaction levy. However, there is a controversial proposal to raise the capital gains tax to 15%, which will be bad for capital markets. But we can assure you that we have an advocacy team that's engaging the Parliament, and the Finance Committee to make sure that they do the right thing for the market. And the beauty about it is the public has an opportunity to comment on the proposed bills. Okay, so I think I see Sylvanus, you've got your hand up. You can actually open up your microphone and you can ask your question. Over to you.
Yeah, thank you, Mr. Conrad. Good afternoon, everyone.
Good afternoon.
Can you hear me? Thank you. Having listened to Conrad and Lucy speak about investment, something came to my mind. And as a youth, as a person who is young in the professional, which is the right investment for one to do? Because actually I was thinking that if someone does buy a land and build a home, somebody will be saving on rent. And now, having listened to two of you speak, I'm convinced otherwise. But according to you, if somebody asks you as a youth, as somebody who is young in a profession, which way should someone go for buying a land and building a home, or should somebody go for shares and the bonds? Thank you.
Okay, thank you. I'll give my view, and then I'll open it up to Lucy to also say. That's a very interesting question. Now, one thing I'd like to start by saying is every person has a different financial journey. You could be 20 years old and you're worth 50 million. I don't know. You could be 75, but you're worth 1 million. So it all depends on what your output is. But one thing I will tell you is if you are the youth, if you're younger, you can take more calculated risks. Okay, you see, when you look at the risk profile, any person who's not the youth, like people my age and higher, we advise them to focus more on fixed income like bonds, because those are certain, those are secure. Okay, and I'll tell you something that's very shocking. Did you know that if you are 60 and above and you've retired and you lose your money, you will die within 3 years because of the systemic shock to your body system of losing your money? Okay, but if you're 25, you can jump up. And I've been there. I've lost a little money and you've jumped back. So what am I saying? What I'm saying is we're not saying don't buy a house. In fact, own a home. Home ownership is one of the biggest things anyone can do. Buy your home. Okay, you can buy your land. That's not a problem. But what I'm saying is, if you are a young person, don't be too safe. Don't be too safe, because you'll never create wealth if you're too safe. If look at all the billionaires. Look at Bill Gates. Look at Mark Zuckerberg. Look at the guy, Alibaba. Okay, they all took a risk and started something in a garage. They all did something. Okay, so all I'm saying is, if you've got enough money, say you've got some money, you can put some aside for your land, for your house. You can do your farming, but don't miss out on the risk or calculated risk of going into shares. That's what we're saying. I don't know if Lucy, you can weigh in on this from your experience.
Yes, thank you, Conrad. I would also say it depends on your investment goal that you have for yourself. It's good you can have your home. You can also have your investment in capital markets. I think it's a matter of personal priority. And Conrad has clearly said, yes, when you're younger, you have leeway to take more riskier investments than when you get older. So I think I hope that clarifies your question.
Yeah. So I think we're saying the same thing. So basically, what we're saying is, look at your own portfolio. And I think one of the biggest things that we all make is, and I think it's not just about the youth. Anyone at any age is always pressured, what we call keeping up with the Joneses. What I'm saying is, people are so pressured to keep up with their neighbor. You have a Toyota, your neighbor buys a BMW, then now you start competing with that BMW. The neighbor buys an LX 570, now you think about now. So we're never content, okay? But at some point, don't make the mistake of going into an investment that's too big for you because you're trying to fit into the crowd, okay? Just your own investment habits, your own projections, your own situation. But I will say, you always have to have money that's liquid, okay? Now, if you look at the newspaper, every Thursday there's an auction of the treasury bills. And by the way, a treasury bill is different from a treasury bond. A treasury bond is where the government will borrow for more than a year, okay? A treasury bill is where the government will borrow for 91 days or 182 days or 364 days, which is less than a year, okay? Now, if you look at the statistics, okay, I'm not sure if it's because people are quite uncertain about the future. I'm not sure if people want to be more liquid, but historically, a 364-day treasury bill used to offer more interest than a 182 or the 91 day, because the longer you keep your money, the more, the government doesn't want to pay you back quickly, so they want to entice you to keep it longer by giving you a better interest rate, okay? But look what's happened in the past few months. I would say since December, I think maybe since like September, October. If you look what's happened, you'll see that the 91-day treasury bill is surpassing the 182 bill. It's surpassing the 364. And in fact, if you look at today's Business Daily, they even talked about that. And what does it mean? It means wananchi want to be close to liquidity. People don't want to give. Don't want to risk keeping the money away for too long because of uncertainty of the inflation rate, uncertainty of the Kenya shilling. So they want to do a 91-day so that you can make your money and then decide whether to do it quickly. So if anything happens, you can pull your money back. Okay, so I think it also depends on how you see the economy. Okay, right now it's a bit uncertain, but I think we're going through a spike. A kind of a slight recession, I think, globally. But I think, and I said before, now is the best time to buy shares because I think things will get better. I can see a question at the bottom. Let's see here. A question from Vincent. What is a hedge investment? Okay, what is a hedge investment? Now, a hedge investment is basically a risky investment that only attracts a club or a certain number of people. Okay. Now, if you look at your records, you can Google Murdoch. He's a gentleman in the US that actually swindled, I think it was close to $50 billion, and he had a hedge fund, okay? So the thing about the hedge fund, it's high risk, okay, very high risk, and it's sort of close-ended, meaning it's a club of people that put their money together, okay? In Kenya, I will say this, the capital markets does not regulate hedge funds. We do not have hedge funds in Kenya. We do not have regulations for hedge funds. So please, if anyone approaches you for a hedge fund, we don't have regulations for that. Even if it's a foreign company, we don't have hedge funds. They're very risky. If you look at your records, you'll see that a lot of hedge funds have gone under. It's just a group of people. Some of them are pyramid schemes. And you can research and look at Murdoch. I think his name was it Murdoch? I forgot the name. But it's a gentleman in the US about 10 years ago, and even I think committed suicide because it was really bad. So a hedge fund is a very risky investment. In fact, in a nutshell, a hedge fund is a very risky collective investment scheme. Okay, and it's not really regulated by CMA. Okay, that's a very good question. We get that question a lot, okay? The thing about money is any person who wants to swindle you is always, you never suspect it. That's the funny thing about the finance sector, okay? You know, it's interesting because when you walk in town, you can almost tell somebody that's about to snatch your phone, okay? It's somebody, you can almost tell somebody that will snatch your phone because there's a certain way they behave and a certain way they're looking at you. But in the finance sector, the most suave, the most non-suspecting person is the person who's the conniving person. I don't know, Lucy, have you been swindled before by any person?
I'm always too careful, Conrad. So
Yes. Yeah, and then they say that if something is too good to be true, then it is too good to be true. Okay, yeah, that's very important. Now we have another hand. I think Japheth, you can open up your mic.
Hello, good afternoon, everyone. Good evening.
Yes, hi. Yes,
Okay.
can you speak just a little bit louder? Just a little bit louder.
Okay, I had a concern. In the past, I tried to invest in some of our financial companies, but now it came about and found out that the returns, maybe in a money market fund, currently it's about 10 point something to 11. But what about if they give you a percentage of around 14%? Is that one of the red flags one should be looking at? High abnormal interest, abnormal returns.
So sorry, do you mind repeating just a bit louder and slow? The connection is really bad on your end.
Okay, I think the network is a bit slow on my side. My question is that sometimes you find that you want to invest in one of the products, and then it happened to me personally. You find out that if you look around all the money market funds, they give you around a percentage of 10%, 11%, but you find the company is giving you a higher percentage than the rest. So I'm asking, in your opinion, is it one of the red flags you should be looking about?
Okay, if I got you correct, you're talking about the money market, that you've been approached by a company that's offering you about 11%, but then you're saying the market rate is a bit more, or is that what I'm hearing?
Yeah, in regards to this one company that is approaching me, you find that it has a higher percentage than the rest. So, from your expert opinion, is it one of the red flags you should be thinking about?
Okay. Thank you for that. And in fact, when I listen to your question, I can almost and I don't want to say the name of the company, but I almost think I think I know what company you're talking about, because that 11% has been plastered all over the before. Now let me say this. Let me be honest with you. The average return on a money market fund right now it's always between you look at the inflation rate, and then in fact, just so you know, the money market rates, return rates, are actually pegged on the treasury bill rates for 364 days. Okay, so what am I saying? I'm saying that if someone offers you 11% and the average fixed deposit is 6%, the average collective investment scheme returns is 7.4%. The average T-bill is 9%, then that by itself is this is just me now speaking as Conrad. You have to do a bit more research, because 11%, 12% return is very high, especially for the only people that actually offer that is actually the people that offer that is mostly government, or if it's a corporate bond, like recently there was an issue of a green bond, offered by what was the green bond that we offered? They had some housing projects here, okay? Not site. Who's the green bond? Lucy, I'm drawing a blank here. But anyway, it'll come to mind. But unless it's a company that's licensed by CMA, then you can offer a bond. But any other money market, it's questionable, because anything over 11 or 12%, to me, that seems more like a pyramid scheme, where you're enticing people to come in at a big percentage, and you're getting money at the beginning, and you're paying off the people that have come in first, and you just keep drawing in more people. That's what, hence it's like a pyramid scheme. But be wary, 11% is a high rate. If the only people offering that right now is unless it's I mean, the infrastructure bond is 14%, a 364-day bill, T-bill is almost 11%, but a company given that should question. But I do ask you, if you've got the mobile app, you can check the intermediary, you can contact the CMA to check if that is a licensed company, okay, and not just any company raising money. Thanks. We're open to more questions. Let me see. Sorry, I drew a blank. The corporate bond, the green bond I was referring to was Acorn. Acorn offered a green bond at a very attractive rate, and they've got some student housings, Kiwetu. But other than that, any other company is sort of questionable. Let's see. There's a question. A question from Solomon Kirwa, our very own Director for Research, ICT and Technology. Is the concept of asset, let me see, is the concept of asset portfolio management application relevant? Does it appeal to the betting guys to spread the risk with a bit of stocks, assets? Asset portfolio. Actually, that's a very good question, okay? In fact, Solomon, what you just reminded me, you know, at one point we had an issue. The issue was, why are people betting and not coming into capital markets? Why? Even right now to speak, there are more youth betting than capital markets. In fact, they're actually losing more money than they are in capital markets, okay? So, unfortunately, as a regulator, we can only give you the information and give you the risks and opportunities, okay? So what we're saying right now, and it goes to Solomon's question, okay? Now, I, as Conrad, cannot stop you from betting, okay? But what I'm saying is, fine, if you want to bet, go ahead and bet. But the question is, what do you do with your winnings, okay? And it goes to Solomon's question. If you bet and you're making a killing and you have some money, take that money and invest it into portfolio management. So you have, yes, you're betting, you're losing a bit of money, but you're making some money that you're investing in capital markets, okay? So I think there's a bit of a relationship there, okay? And in terms of the risk that Solomon you're talking about, when it comes to shares, it's a less risky product because the actual issue is betting. Let me tell you something. Betting is purely random, unless you're doing like the soccer betting, where you watch the sports and you have a feel, but it's really random. It's by luck. There's no math to it. But in shares and portfolio management, there's actually you can actually look at the profitability of the company. You can see all the red flags. Are they changing their CEOs every 6 months? Is the chief financial officer resigning because of issues? You know, is that you can look and we look at the share price. You can see the earnings per share. You can see the returns. You can see the turnover ratio. We have all these figures that we give you for you to measure the company. So I think the linkage is in betting, it's risky. In stock, in buying shares, you have the information that you're informed. However, if you bet and you win some money, you can actually translate that into shares and have a portfolio. Okay. Now, I think that I just got another question. There's a question about, let's see, the question about Cyton. Okay. There's a question from Robert. In summary, as the market regulator, please tell us what happened with Cyton, Debel, and what the official response was, and what are you recommending to aggrieved investors? Okay, thank you for that. Now, the Cyton issue, and let me first say this. Right now, there's still litigation. There's actually a court case going on, and I'm sure you've seen all the social media by Edwin Dande. So I can't speak much about it, but I will say this. Dande was Cyton actually was conducting capital markets business without actually getting an approval. So what we did was we actually make them, have a license into capital markets. However, there were issues of, there were issues of over-promising to the investors, where part of their CIS, which is a collective investment scheme, was going into some structures of buildings which were not delivered, And then at the same time, they had an issue with the custodian, which was Court Bank, that actually dropped them. Okay, so there were issues about the overpromising of the interest rates and the money markets as well. So I think what happened was then the court, I think, had ordered them to actually give back the clients the money that they owed, which is a lot of money. So it's now in a court case. Okay. So right now, what we're recommending is there's a court case going on, and we actually are in contact. We have our lawyers. They have their lawyers. So for that, I'll just have you to be patient. There's going to be an outcome of this. But I will say this from a personal perspective. Anytime the courts are more sympathetic to investors. Like if you look at what happened with Imperial Bank, with the bond, if you look at what happened to Chase Bank, you'll see that the court is more sympathetic, especially when the facts are there, there. So just be patient. It's in a court case, and there'll be more information coming out. But thank you for that, Robert. A very good question. These are very good questions. I think it's very informative. But we're still open. I don't know if Lucy, you can see another chat. Yes, there's something from Wilson. Yeah, yes, sorry.
Oh yes, something from Wilson. This is great. This is great information. We should be integrated in the education system, starting at the primary levels, going up. Most youth are just told to save for future, but the how, where, and when is still missing. Unfortunately, the banks too don't provide much education unless you have a premier account. Thank you, Wilson. I think this is a good comment, and we appreciate it. And the authority has been working with the Kenya Institute of Curriculum Development so that we can infuse the financial literacy in the, we worked with them to infuse the financial literacy in the CDSC curriculum, and that is going on currently. We are hoping that going upwards in the secondary schools and the universities, that will also continue, and we'll be able to cover, to instill the culture of saving and financial literacy from a young level. So thank you. Conrad, I don't know if you have anything else to add.
No, I'm actually no. I think I'm good. There's actually one more question. Why has the IPO activity? Sorry, you've got an echo. I think Lucy. Yeah, that's right. Okay, a question from Robert. In your view, why has the IPO activity in the local market been extremely low in the last 10 years? This is a very this is a question we've actually been working on for a long time, and it's actually, in fact, that question alone is a forum. It's like a forum on its own. But I will say this, and I'm not just going to touch on macro factors. One of the things that we deal with is, number one, a lot of companies in Kenya, unfortunately, don't want to seize control, don't want to, relinquish control of the company in terms of, sustainability and succession planning. So you'll find that some companies are afraid to come into the market because of continuous reporting obligations. When you come to the market, there's so much reporting in terms of your bookkeeping, your finances, your corporate structure, your board, your board structure. We have a certain corporate governance structure. So it's very imperative that coming to the market involves more scrutiny. So you'll find that a lot of companies are not willing to have that scrutiny. Okay, that's one. And number two, you find that a lot of companies have some sort of relationship with some banks where they have some sort of way of getting money quickly, and then having a deal where they can pay back for a certain period of time. Okay, but having said that, we have a special program. We actually have a department that actually is working on bringing people on board. You had the president himself talking about privatization. We're going to privatize at least 10 companies before the end of the year. And you'll see that we also go to different counties, talking to different companies, SMEs, and we have a lot of programs that we want to encourage SMEs. We even have what we call a growth enterprise market segment, which is a segment specific for SMEs, where they can come in and there's less the paid up share capital is less. The reporting obligations is less. The profitability does not have to be 3 years like in the main market. So I think these are things that we're working on. Unfortunately, right now, it's actually a dry spell globally, not just in Kenya. And it's something that we're working on. You can see the macroeconomic factors right now. There's a high inflation. You can see the dollar, currency, which is, the shilling has gone down. So that's something we're focusing on. We also have a program where we want more companies to issue green bonds so that we can have more environmentally friendly for the future, for you guys, for your future, when you've seen the weather, how it's changing. Yeah, but we're going to have another special forum specifically on IPOs and get more. There's more to it, but I'll get into it. Yeah. There's a question. Oh, hello, Fandu. Why do youth not consider investing in capital markets? I have an answer for you. The reason why the youth do not invest in capital markets is because of a cultural attribute that of quick money. Unfortunately, in Kenya, we want quick money. We're not patient, okay? People don't understand that capital market is about patience. It's not about investing today and getting returns in 2 weeks, okay? It's about, it can even be a year, it could be like 3 years, it could be 5 years, but it's about patience and about your equity going higher, okay, and about price discovery. So for right now, the youth, and that's why betting is actually more popular, because the youth want quick money, okay? I don't know where that comes from. I don't know where the quick money mentality comes from. That's another forum. But I think until we realize that it's capital market is about long term and about patience, is when you'll see more people come into the market. Because I'll tell you this, there's a lot of people that make a lot of money in capital markets, but you just don't know who they are. And the beauty about capital markets is nobody knows your business. Okay, like right now I'm speaking, you don't know how many shares I have, you don't know my net worth, okay? It's between me, my stockbroker, and the CDSC, okay? And of course the registrar, the listed companies. But, and that's the mindset, and that's why we're having this forum right here. We're trying to see how we can entice the youth and give them that information. I don't know, Lucy, do you want to add to that?
Conrad, you're right. I think the problem has been the instant gratification that most of the youth tend to have. And that is where you find they are not able to invest in capital markets, because as I said in my presentation, you think long-term when it comes to capital markets. So they have no patience to wait for the long term. And that's why they are opting for the sports pesa and the gambling. Thank you.
Yeah, thanks. There's a question from Japheth. Would you say the capital markets in Kenya has been able to shed off the effects of COVID-19, or are we still a long way to go? I think you're asking if, okay, let me say this. In 2020, 2021, we got innovative, and for example, we issued a circular allowing listed companies to have electronic, like online EGMs, or annual general meetings, AGMs. So, that's one thing we did. And some companies that I mentioned, like Safaricom, did quite well because everyone is doing bundles. And we even did, alongside the NSE and some intermediaries, we had a fund that we gave to, some institutions to assist them. So I think in terms of COVID, of course, at the time, Kenya was closed in, there was no travel, and a lot of people, like, it affected the imports, it affected movement, but I think now there's movement. As much as it's debatable whether COVID is still there or not, I think it's still there. I think maybe our immune system has become stronger, but we still have to be careful. But I think, for the most part, I wouldn't say that COVID-19 is an issue. In fact, the beauty of this is, I think companies have found a way of cutting down expenses by using more technology. So because of COVID, capital market has got more technology, okay? And when I talk about technology, you can see the mobile app. The mobile app, almost I think 65 or 70% of all our licensees have mobile apps, which means you don't have to actually go to a company for the KYC, know your customer process for you to actually open an account and buy shares. So I think we've gotten past it. but not to say that you shouldn't wear your mask. I think there's still COVID there. Okay, we have time for a few more questions. I'm just looking down the list here. Oh, there's a question from Mariam. Does CMA license Kenyan institutions for trading in foreign financial and capital markets? We actually, now, here's the thing. As a regulator, we license jurisdictions that are domiciled in Kenya, okay? In Kenya, okay? Now, the only time that we come in with a foreign jurisdiction is if a company, say a fund manager that we license, if the fund manager wants, like say, opens a fund, like a unit trust and wants to market to say Mauritius, okay? We will then ask for a no objection letter from Mauritius, okay? And at the same time, we have regulations that limit the amount of investments that can go offshore. And that amount is 10%, okay? So 10% of an investment can't all go offshore, and that's to protect you, okay? Anything more than that will need special regulations. But to answer your questions, every foreign country has their own regulator. So for a company to want to be licensed there, you have to go to that regulator. But we only license the ones here and only come in if they want to do business in another jurisdiction. Yeah. Okay. Now, and in some cases, if a listed company, for example, wants to cross-list, you can cross-list like here in the London Stock Exchange or here in Dar es Salaam Stock Exchange, then that's where we come in as well. Okay, these are very good questions. Like it's like so any other? Oh, there's one. Is there a hand up? Let me see here. Okay, do we have any other? Lucy, do you see any questions?
No, I can't see any questions. I think all the questions have been answered. Perhaps to just acknowledge, I've seen someone who has joined from Rwanda. So karibu sana. Yeah, so we have people who are not only from Kenya, but we also have someone from Rwanda. So welcome.
Okay, thank you very much. And I think I think you've ended right at a good time. Thank you so much. And Rwanda, welcome. And for those of you joining us, we actually have in terms of the East Africa community, we have sort of a working group called the YASRA, which is the East African Securities Regulatory Association. You've got Kenya, Uganda, Tanzania, Rwanda, Burundi. And we actually come together to see how we can sort of work together in the capital markets or in regulatory framework and all other aspects, even listings. So welcome and karibu. And we have also recognized we have Dr. Ellen Evangata. Dr. Ellen was actually one of our what we call resource persons. She used to assist the authority with spreading the gospel of capital markets. I thank you for joining the session. As much as we're ending, but it's a pleasure seeing you. So thank you. So I think at this point, I don't know if Lucy, you want to have any closing remarks, and then we can let people have tea.
Thank you. Mine is to just thank each and every participant for their time. I hope it was informative, and I hope you have been able to learn one or two things. And based on your comments, I think I can see most people are saying it's quite informative, and that they have one or two things that they have taken home. So thank you very much for your time. Perhaps if there's any other topic you would want us to cover, you can let us know through the chat. Just tell us any topic you'd like us to cover, so that when we have the webinar next time, we can always factor in the special requests or the specific topics of interest to the participants. So thank you very much for your time. We had promised to finish this around 4, and I think it's just about that time. So we once again thank you for your participation and attendance. Thank you.
Okay, thank you again. And as mentioned, we've got your email. We'll actually put the presentation. We'll send them to you, and at the same time, we'll post it on our website. And then we look forward to more engagements. And thank you so much. And again, You know, we have, if you have more topics that you want us to talk about, feel free to engage. And, you know, it's such a pleasure. So enjoy your tea. And this one's on me. You know, you can send me the bill. All right. Have a good day. You can leave at your pleasure. Thank you.